My next guest is a familiar face on our program, Mario Gabelli, Chairman and CEO of GAMCO Investors, managing over $18 billion and a pretty good record, beating the market almost every year. Mario, it's great to have you back on the program.
Terrific to be here, particularly after last night.
I know. Well, I want to get to that, but actually I want to first talk about Ford, as Ellen was just talking about. Burning less cash, smaller loss than expected. You and I have talked a lot about the auto industry. Is there a turnaround happening right now?
Well, car sales have been flat at about 9.5 million seasonally adjusted rates. Production has come down sharply. Looking into the third quarter, production's going up. Fourth quarter, it's going up. Inventories are lean. But more fundamental than that, the industry has changed the model. They've changed not the car model, the business model.
What do you mean, the business model? You mean because we have fewer dealerships, less
well,
debt?
that's all part of that. But essentially, go back 10, 15, 20 years ago, you basically banked labor. That is, you guaranteed a certain number of hours. That made it a fixed cost. Therefore, you produced a lot and discounted. Now you're going to produce less and not discount as much, so that the profitability for those that remain will go up nicely. And in that regard, the new General Motors, the Fiat Chrysler is still an iffy question, and Ford will participate. But the money is made, in my judgment, also in the vendors to the auto industry.
Well, like the auto nations, as you were talking about.
Well, the Tier 1 suppliers, the original equipment suppliers that also can buy up the Tier 2 and 3, and a consolidation taking place in that area. So companies that sell safety products, companies that sell components needed on a global basis, and Betty, in the aftermarket, companies that sell replacement parts. There's 250 million cars on the road. There's 600 million in the world. You produce in the United States 10 million, but in the world you'll produce 60 million. So we're a small part of the global marketplace.
But have the vendors shrunk as much as the automakers have? Are they catching up?
Well, the answer is that if you're selling one part for every car produced in the world, you sell 60 million parts. Last year you were selling 70 million. You'll sell 60 million for the next 3 or 4 years. But then, in addition to that, you'll gain share by selling other parts. So the strong will get strong. It's the Goldman Sachs of the auto industry. Who out there will do well as a parts supplier? Is it Tenneco? Is it Superior Industries that make wheels? Tenneco makes ride control products. And we like that world. And more fundamental, the president wants to hug the planet Earth. We all want to love the Earth. And so you want to be environmentally friendly, safety products. And what companies produce that? So there's a Borg Warner, which gives you more miles per gallon by coming up with new products.
But strong gets stronger. Would you apply that to Ford?
Oh, yeah. I'm calling it the Goldman Sachs approach to the world, and that is J.P. Morgan, Jamie Dimon, Goldman Sachs. How do we get companies that will be the leaders on a global marketplace? Who will sell to the consumer in China? Who will sell to the consumer in what I call the crib countries, China, Russia, and Brazil? 3 billion consumers that want goods. And will they offset the decline in the U.S. consumer? And that's what Bernanke was talking about yesterday.
Right, exactly. And of course, applying again to the winners, as you mentioned, in various industries. But from autos to healthcare, though, Mario, you were stayed up late last night watching the press conference.
I wasn't up late last night. It was an 8 o'clock call. I stayed up late to watch the Red Sox lose.
Fine. All right. Well, what is your view?
Basically, I think that in addition to a tax on the rich, 40% of the health, first you have a problem. If the cost will double in the next 10 years if nothing changes, we know we need to change. Behavior, 40% of the healthcare costs are tied to behavior. We should have a tax on the number of calories people consume over the daily minimum. Because obesity...
Oh, come on, that would never work, though, Mario.
Well, so it won't work on taxing just a disproportionate part of the population either in a fragile economic environment like we have now. The point is we have to do something. And so we have to come up with new ideas. How do we change behavior, which is 40% of the cost? How do we have diagnostics in early so that you can understand your genetics and you can understand what you can do to predispose yourself to healthcare costs? How do we get more doctors in the system? How do we get more doctors? And how do we eliminate tort? How many tests do I have to take because my doctor's afraid of getting sued? What is the tort reform that's missing in that ingredient? Not one person has talked about that.
Okay, let's talk more about healthcare. We're out of time, though. Of course, I'll be back with you, Mario, after the break.
We'll have a healthy conversation.
Exactly. Good fun there. We're going to talk more about healthcare reform with Mario, as well as bank earnings and also media, what Mario is known for. Equity are open on this Thursday morning. We're going to be back with a lot more conversation with Mario. Keep listening. Down at the New York Stock Exchange, and we are back with Mario Gabelli of GAMCO Investors. And Mario, on a serious note for investors and continuing this healthcare reform issue, as an investor, somebody who looks at stocks, where do you unlock the value? With the debate going on right now, is it harder? I mean, how much harder does it make to value the companies in the healthcare industry?
Well, we have certain core competencies, and healthcare is not one of ours, so we would look at simple things like money managers. So we'd rather focus on Legg Mason. How healthy is that company? So we're looking at the health of companies that are off the radar screen. Legg Mason, we think, will double in the next 2 or 3 years, and the stock's 25. And why? Because basically assets are growing. The whole world of which we're a part is
but we're only a few months out from all those money market redemptions, though, and all the redemptions coming out of the mutual funds.
The world has $60 trillion of fixed income. And even with the depressed market, and because of the depressed market, at the end of December of the year 2008, equities were 30. So that world is $90 trillion. And in 2 or 3 years, they'll be back over themselves over $1 trillion. But they have a small share of that market. Cash flow is turned. The balance sheet's in great shape. And they have some wonderful brands. And so we like Legg Mason. So if you want to have health in your portfolio, you should own a stock. And we own it.
You own it, right?
Oh, of course, we own it for clients.
Well,
I wouldn't talk about it if I didn't.
No, and I know you like to talk about the stock that you own. But, Mario, overall, though, earnings, what have they told you so far in the second quarter?
Companies? Well, listening to conference calls. Right now, you can start at 6 in the morning and finish at 8 o'clock at night and listen to conference calls. And so you have to pick the ones you want and get a flavor of them. So companies like Precision Castparts are a wonderful company run by Mark Dunnigan. They are the Goldman Sachs, the J.P. Morgan of component suppliers to the aerospace industry. Clearly for them, Boeing's Dreamliner and Airbus's equivalent of a Dreamliner, when that comes on board, they'll have significant earnings. This is a stock, Betty, that is selling at $75. PCP is the symbol, 140 million shares. They will earn in 5 years, the world will have a normal recovery. They'll earn close to $10 a share, and they'll have $40 a share in cash. Mm-hmm. So do we worry about the short-term dynamics?
Right, but the fact of the matter is a lot of the companies that have come out with earnings in the second quarter, a majority of them have beat. Does that tell you that there is perhaps a trough that we're seeing in earnings or not?
Maybe everyone became so concerned about the world, and properly so, in November, December, January, February, March, April, that they forgot that companies are very good at controlling costs, which is what they're supposed to do. And so they lower their expectations, and what's coming in are kind of lackluster, but better than expectations. And what is the stock market a function of? The outlook for earnings, the multiple on earnings, a function of confidence.
And the outlook for the economy.
Some of them are, and some companies. But let's take a look at what economy we're talking about. The United States is 24% of the world. There's $60 trillion. The U.S. is 25% of that in rough numbers. China, Russia, India, and Brazil are now up to 14%. China will exceed Japan in terms of its share of GDP. And where are we talking about the global consumer? Will the consumer in China, will the consumer in India provide enough ballast to stimulate the global economy?
Okay, so we're gonna go on that.
And 40% of the profits, Betty, are the S&P earnings are from outside the United States, and starting about the middle of September, October, the dollar is no longer a headwind. It becomes a tailwind in terms of reporting numbers.
Well, it was a little bit for the drug companies. But, Mario, we're going to continue that because do we want to stay with companies then that have more an international focus? That's one question that I have for you after the break. So we'll talk more with Mario Gabelli in just about 2 minutes. Keep it here. Okay, we're back getting some final thoughts with Mario Gabelli. And Mario, just ahead, or just in the last segment, we were talking about international growth. Do you want to buy now into stocks betting on a global recovery?
The recovery has already started in China, but the notion of the next 10 years, where's the growth going to be? The U.S. will grow 2.5%. The rest, the emerging countries, China, Russia, and Brazil, higher. Global, local. Make it here, sell it there. For example, John Deere. Case New Holland. What does China need? Do they need bourbon? What else do they need? What does their consumer want? And so we like that notion of investing. You can invest in Baltimore, like Legg Mason, or you can invest in Beijing, like the company that just went public in the cement business. Mm-hmm. So Bombay or Mumbai, Beijing, the world is simple. You just want to find the best ideas, risk-adjusted, and there are bargains out there. For example, today, Bristol Myers announced they're buying a company, Metarex, because they want to grow. The stock was $8.50. They're paying over 16. That's a bargain, but there are a lot of bargains out there, and our job is to find those. And stock selection, stock picking, is going to be a way to make a lot of money over the next 12 months.
We've heard that quite a bit. But speaking about bargains and cheap, media stocks, cheap.
Yeah, I think that the consumer recovery, which is global, and then will become local, that is the U.S. sometime in 2010, the consumer will start doing better. What you want to own is companies that derive the demand from advertisers. And basically, do you want to buy an advertising agency? Do you want to buy News Corp? Do you want to buy Viacom? Do you want to buy CBS? Do you want to buy Time Warner? I like Time Warner. I like Viacom. And I think they make good investments.
But advertising is not going to be able to sustain revenue growth going forward as much as they have in the past.
Well, advertising is a $580 billion industry globally, and it's had an air pocket in 2009. 2009, it's down. At some point, it resumes its growth tied to gross world product growth. GDP on a global basis will start rising. We're always focused on the U.S. economy and what does that mean for corporate earnings. But 40% of the earnings are outside the United States. Tech is an important part of that. So there's a lot of things going on.
Well, how do cable broadcasters make their money over the internet then?
They will make it by reaching eyeballs and change the business model. It's wonderful. That doesn't mean that Hulu does not displace the new technology, just like Skype is replacing the long-distance phone call. Business models change. The iPod came along. Technology is wonderful, and we just have to adopt.
Okay, Mario, it was a pleasure to have you with us for this half hour. It went by so quick. Great to see you.
Always does when I'm with you.
As always, Mario Gabelli, Chairman and Chief Executive of GAMCO Investors.